morning, everyone. Welcome to our Thursday morning session, our DTS trading room. Hold on a second here, I'll get you my monitor. Okay, the market's just opened up. I'm going to change my mouse, make it a little bit bigger for you. Okay, so the market's just opened. They're looking a little bit, or they were looking a little bit weaker from where they had left off. Let's take a look here at the Falcon. This is the NASDAQ. And the afternoon session did give us a little bit of a rally before tailing off slightly. It looks like the market finished off somewhere around here, around 44, 48. And during the overnight, a little bit of a tailspin before it started recovering again. And then this is where we're at. So we had a trend change signal come in just before the market opened. We're bouncing up against our median line at the moment. So nothing going on in the NASDAQ just at the moment. Crude oil. What's up with crude oil here? They're put in a little bit of a rally also through most of the overnight session, falling a little bit flat now that the market is open. Might be working on a late filter entry here with our Falcon. So the filter has gone out of sync. The trend line so far still holding its own. If that trend line comes back into sync, we should have a buy signal. So keep a lookout for that. Okay, so here comes that crude oil. We've got our warning dots. I can anticipate where the buy signal is going to print. It's going to print right there on the highs. Now, there we go. Okay, so a nice looking little late filter entry signal here on crude. I'm going to try to hold my stop below these lows because this would be the failure point, right? If we trade back below this primary resistance line, then we're going to be on the wrong side of that trade. Okay. All right, looks like the NASDAQ finally picked a direction. Oh, look at this. We had a green bar buy here. Everything was in sync. The green bar buy, of course, a stronger signal in the eagle. I like when it all falls into sync as well. Oh, sorry. And that's what makes these signals a little bit more reliable. The with trend signals, when they come with the ATR and the band, everything being in sync. Here's a red bar sell. It was interesting that we had a green bar sell just before that green bar buy. So we'll see what kind of follow through we get out of that. Market looking a little bit more neutral, even though it is heading higher. I'm just looking at a larger view of it. If you take a look at the overall range where we've been between highs and lows, kind of trading right in the middle of that mix. Soybeans went on an early tear out of the open. No, it doesn't look like much, but at 12.50 a tick, soybeans add up pretty quick. First micro macro cross signal just on the opening bell. And with soybeans, I tend to go with a more aggressive profit objective as well. But you can see if you went with your high probability target, absolutely no problem finding that. Well, there they go. So let's see, would they have found our profit objective yet? There's that green bar sell right there. I probably would have risked it. Well, you know what? I would have tried to risk it down there. And not bad. Certainly enough that you see this candle right here with this long tail to it. My stops would be below there right now. Essentially a break even. Or if not that one, certainly the long tail before it. Just looking for the NASDAQ to give me a little bit more structure so I can try to pick up another signal. One thing that I haven't tracked, and I suppose I should, are the opening signals out of the NQ to try to determine the failure rate of that very first signal. So for instance, here on the Falcon, where we have our open signal occurred right here. Very first signal out of the open, you can see very good follow through. Came on the heels of a trend change or a late filter entry signal, which we know to be high probability. Speaking of high probability, crude oil just found our profit target off of the late filter entry signal. Very strong signal in the Falcon. Now, it's the type of signal that a lot of times we might get. You see, we actually had two late filter signals here in crude oil. One occurred right here. Filter goes out of sync. Trend line does not. Another one occurred right here. Trend line stays in sync. Filter goes out of sync, comes back. But they don't go on indefinitely. If we get a third late filter entry signal, I have to admit I would be a little suspicious of that. Let's see if I can find another example where you get more than one. Well, one occurred right here. Another one occurred right here. This one did not reach its profit objective. Well, I shouldn't say that. I tend to double the profit targets with crude oil. Let's see if we go with the high probability target, if we would reach it. Oh, it looks like it'd be awfully close. Oh, just, yeah, turned on its heel. So you had an opportunity to reduce your exposure somewhat. If you're, I should be running my auto break-evens on this one also. If you were running your auto break-even, you would have been at break-even before this market had a chance to reverse on you. But this is an exercise you can do on your own as well. Go through your chart. It's good practice. Find your late filter entry signals and then see how many of them you get within a trend before the market turns over. You'll find that 1, very reliable, 2, usually reliable, 3, you're starting to press your luck a little bit. Now, of course, there are always exceptions, but that tends to be the way it goes. Okay, the NQ is starting to slow somewhat. Nice little rally so far. shoot a trend line across the bottom here, just see where we've been. So we got one of those. We got one of those. Got another one making a bit of a channel across the top. You can see this lower one pretty much hugging the band. Okay, so we had a macro pullback here in the hawk scalper, got spoiled by these yellow bars. Might be witnessing a test of the extreme. We do have another macro pullback signal right here. This one is in sync. Let's see, what would that cost me to be wrong? So if I took it above the high, covered below the swing low, oh, a little bit late on that one. I was going to dial it down and just toss a onesie in there, see where it might go. Okay, so knocking up against the highs now. Let's see if we get a chance on one of the other tools. Okay, we do have again a late filter entry signal here. We do have an opportunity for a second push on this signal, which is encouraging. Okay, we'll do one of these. Okay, so all I'm doing here is I'm taking advantage of the second push opportunity. Sometimes when the market starts slowing, and you can tell it starts to slow because, you know, we had a little rally here, we had a pullback. We had a big rally here, we have a smaller pullback. It looks like we're having a little rally. you can tell by the length of the legs, I refer to these things here as legs, that the market is starting to slow down a little bit. I try not to microanalyze. I wouldn't look at each of these little swings necessarily as a leg, although I suppose you could, but by doing so, it kind of makes it more difficult to interpret. For me personally, I think it's better to focus on the larger retracement or consolidation phase and say, okay, this is leg one. You could say that's leg two. Here's leg three. Right? And see how the size of the legs, how legs one and two tend to be the largest, and leg three starts to get a little bit smaller. We have the same thing going on right now, I suppose, where here's leg one, major consolidation. Here's leg two. So now is leg two done? Are we going to see a consolidation phase? Is it going to move sideways? We can normally count on two pushes or legs in the direction of a breakout. And by a breakout, I mean, a violation of a major swing point. So we could count that as a major swing because that's where the market truly reversed, started going higher. We started forming higher lows, made a higher high. So we can count on two legs in the direction of the breakout normally, but number three sometimes can be a little bit hit and miss. That's why if you're going to put a runner in play, if you can put it in play for the first or second leg, it tends to be a little bit more productive. I know I've got a runner in play here on the third leg, and that seems to be go against what I'm suggesting. All right, so I could change this order now to go with the new warning dot. You see how we've got a warning dot printing. So I can anticipate the hash mark is going to be right here. And again, I'm just going to go in with a onesie. This is a little bit of a, there we go, there's our hash mark. Did they slip us on that? Okay, so we're in at 51.25. Now my auto break even didn't trigger. I'm not exactly sure why that happened or didn't happen. I'll have to check my settings after this trade. You do not want to check settings while you're in the middle of a trade. Okay, so 52.25 is 4 ticks, 53.25 is 8 ticks, 54.25 is 12 ticks. So 44.55 would thereabouts be a good spot to hit the break even. Well, what do you know? We got through the quarter to the hour mess without taking a trade. Okay, this candle here with the long tail, that would be a nice one to roll my stop below because it showed some selling effort and it showed that the buyers did push the market up a little bit. So probably a good time to reduce your risk exposure somewhat. Oh, come on, get up there. Come on, NQ. You know you want to. Come on. I think they did find our... oh no, they didn't find our profit target yet. Come on. There you go. Get going. I gotta take the trade just below that bar right there. Well, you know what? That's close enough. I'll go break even plus. Ooh, looks like I should have held on to that. Had a runner in the crude oil trade. Here's crude oil on the Eagle. We took a Falcon trade earlier. Here's crude oil on the Eagle. Very nice green bar buy. This came pre-open about 15 minutes before the market opened. This was, I guess, more or less the same signal that we took on the Falcon, had a corresponding signal here on the Eagle. Again, the with trend signals are always nicer when the ATR is in sync. Oh, look at crude oil go. Yes, sirree, that would have been one to have a runner on. Back to the action on the NASDAQ. Come on, NQ. You know you want to. Just get up there a little bit more. It would give you a little push. Just a little push. Come on. So you see the struggle on this bar and the fact that we had made a little bit of a lower tail, or at the moment it's a tail. I initially put my stop here because this bar was also a bar that had a big struggle going. So it showed me that the sellers tried to push the market down, the buyers brought the market back. We've got the same kind of thing going on here. I was a little early rolling my stop. They may tag me at break even and continue higher. We'll see here in a moment. I think if we can get, there we go. All right, now that this bar has held, chances are pretty good we're going to see them roll a little bit here. And I'm going to start previewing other stop strategies. Maybe we'll go with the parabolics. Why not? Parabolics are nice when you actually hit a trend for keeping you in the trend most of the time, and they roll you up pretty quick when the trend starts to weaken. Notice they're not so good if the market is moving sideways a little bit. You get a lot of noise. But if you see, even here, the market made a nice progression, but look at the parabolics really didn't do that good a job of holding you in. This one, they seem to fit a little bit better. And of course, everything is customizable. You can adjust all your settings. So in order to make the parabolic a little more conservative, in case you don't know, you don't feel like messing around with the numbers, dial your factors down to 1. Wherever you see a 2 here, throw a 1 in, and that will slow things down. And you can sometimes leave the max set at 20 and set your acceleration and step at 0, 1. I know those numbers don't make much sense to anyone except mathematicians. Okay, so what's our open profit? Oh, not bad. Okay, we're up against yesterday's highs, I believe, around the 44.60 area. That's going to be slowing us down, maybe. Might be a good spot to cash in, cash out. What's the correct usage of that? Cash in or cash out? Come on, get going. No, there they go. They're starting to, the parabolics are starting to squeeze. I think we're going to get tapped here on this little bit of a, there could be a little bit of profit taking going on. It seems like a good plan to me. There we go. We could have run the a more conservative stop strategy, and this is a note for your trading journal. What if? How would things have worked out if I had gone or stayed with an ATR stop? And while we're doing that, let me see, speaking of stops, do I have auto? No. Okay, so here's how you set your break even, your auto break even. You can see that currently it's set at disabled. So I need to go down here and turn my trade manager off, here where it says enable, go to defaults, click apply, and now I can make changes. So I'm going to enable my auto break even, And I'm going to save as Falcon. And I'm going to turn it back on. So now we should have a break even next time I take a trade. Okay, so here was our macro pullback signal. You can see it had very nice follow through on it also. So good opportunity for a scalp there. That was off of this signal here, the macro pullback. And unfortunately, the yellow bar spoiled this one, but we did get that other one right there, right next to it. Now, oh, look at this. We're getting another macro pullback. Now, macro pullbacks, you only tend to get a couple within a trend. So I'm not so sure how anxious I will be to buy another macro pullback. Mark says that he says it depends on the context, but they both work for me. He took the yellow bar. I will caution you. A yellow bar trades, sure, if you have an obvious trend is not so obvious down here. But if you have an obvious trend going, sometimes you can cheat and take a yellow bar and it will still work out. But the problem with yellow bars is that you get stuff like this going on. And I suppose this yellow bar macro pullback did work out. This one, however, did not, this sell. This one, actually, is speaking of yellow bars, a 4-arrow consolidation is about the only signal I will take a yellow bar on with the hawk, but that's me. So here we have 1, 2, 3, the fourth signal triggered off of a yellow bar. That's okay. That 4-arrow consolidation is such a strong signal that I'm okay taking it on a yellow bar. Here was a red bar buy. Here was a yellow bar that worked out. Yeah, so for the time being anyways, it looks like the yellow bar signals are working out not too bad. Still something that I tend to avoid just because there's no commitment. You see, here was a yellow bar, sell. Nothing is in sync yet. At this stage of the game, don't lie to me, at this stage in the game, this would look like a sell to you. Market's been in a downtrend, a little bit of a retracement. It's coming back. Macro lines crossed. Even though nothing is in sync, this would look like a sell. Brings you in, and then all of a sudden goes screaming the other way. So, like I say, at the end of the day, it's entirely up to you. It is your money after all. But for me personally, I think I tried to stay with the higher probability signals. Okay, Michelle is asking, Eric, if the NASDAQ Falcon came into a trendline crossover buy now, would you consider taking it? Good question, Michelle. Because I think what Michelle is thinking is, how many legs are we into this trend? Right? We do need to see a test of the extreme before there can be a failure. And so we've come back down here. We're working on a late filter entry signal. This would be our third one. I guess we'll have to wait and see how it builds. Hopefully the market will continue a little bit lower and change the trend line and remove all temptation. But if the trend line did not change and the filter came back into sync and I got a buy signal, I would bite my lip and take the signal. I would probably dial down my risk amount somewhat. My spacing got all mixed up there. Okay, here's something that many of you may not realize about trend lines. Normally we look at markets like this and we're only looking at the lower trend line, right? And when that lower trend line breaks, we think, aha, the market is reversing, which is very often true. But did you know that if the market violates the top of the trend line, it's also a sign of weakness? Yeah, you wouldn't think so, would you? But it's true. If the market overshoots the trend line, it will often suggest that perhaps there is some weakness in the market, almost like a bull trap type idea. Michelle asks, regarding the NASDAQ, so her first question was, if the Falcon came into a trendline crossover, buy, would you consider taking it, or would you be of the mindset that the NQ needs to do a bit of a retracement first? Michelle, I'm going to give you my best trading tool. Where did I put it? Hold on a second here. This is a great trading tool. And this is what you should do when you're trading. Try not to think too much. You know, I know what you're saying, Michelle, and it's very tempting to second guess the market. I really try not to. That's why, like I said, if it did come back with a proper signal, I would have to take the signal. This is why I haven't done it yet. I should do it one day. I've mentioned it before, but why I will take a signal like a first micro macro cross. Even though it doesn't look especially promising, here's our first micro macro cross signal. But I know the probabilities of that signal mean that at the very least it should hit my high probability target. You should try to get yourself to the point where you have the confidence in the signal to take the signal even when it doesn't look very good. A trading friend of mine used to say, the big money is always on the surprise side. So what he meant by that is guys like us are looking at this and saying, oh, wow, the NQ definitely needs to retrace, and everybody's shooting trend lines all over the place now. And they're saying, okay, trend line support, let's get in there and buy, and the market will rally a little bit. It might fail and head lower. Or what I suspect is going to happen is that it's going to break here a little bit, and then everybody's going to say, oh, NQ rally is over, and they're going to look for opportunities to sell, whether or not we actually get them. So I try to trade the signal, and sometimes I will admit it will be uncomfortable. Even this signal here on the NQ or crude oil or whatever it was that I took, this did not look good to me. It didn't. It looked like, okay, the NQ made a big push up back here in the overnight, a little bit of a retracement. We're just a few minutes into the session. I'm getting a late filter entry signal. What do I do? Well, I know the late filter entry signal is a high probability signal, so I need to take the trade. And I think this is the one I just put a onesie on. So however it worked out, it was something like this. I tried to cover below here. But the point is, you take the trade. If the high probability signal fails, okay, it fails. You can say it was just one of those things. I followed my rules. I didn't incur a huge loss. Where's the next signal? Where's my next high probability signal? You see, I'm trying very hard today to only focus on the higher probability signals. And that means a lot of waiting most times. Here, I need to go back to risk mode on my trade manager. A lot of times that means you're going to be sitting around waiting for the market. Now, if you're, more excitable trader, then you're going to want to focus on something like your hawk, which will give you more trading opportunities. Craig is asking, what are the targets you like for each bird? Craig, the targets are universal. They apply for all markets, but I do have a little bit of an exception, which I'll tell you about in a moment. So for the hawk scalper, we have $50 targets per contract. For the Falcon swing trader, we have $100 per contract targets. For the Eagle trend trader, we have $200 per contract targets. And for the Raptor, we have $100 per contract targets. Now that is across the board, whether you're trading the NASDAQ, crude oil, gold, the Russell, widgets, it doesn't matter. Those are always your high probability targets. Some markets, like gold or crude oil or soybeans or the Russell, which tend to be a little bit more volatile, I will double the profit objective. So for instance, let's take a look here at crude oil. You will find that crude oil on a $50 target on your hawk will almost always, I'm not sure crude oil can even not hit a $50 target. $50 in crude is nothing. So that's 5 ticks in crude, because crude trades at $10 a tick. So if we set up our trade, here's our macro pullback signal. Let's say we set it up something like this. Okay, boom, hit our high probability target, money in the bank, and then the market reverses. In fact, and now I haven't tried this, so please don't quote me on it, but because it's such a small target, no, I was going to say you could probably take every signal in crude. No, I wouldn't suggest that, because I see a few that failed here. But here's our first micro-macro crossover signal. Not a very inviting signal, right? Because we've got the big run up. Ideally, we should cover the trade somewhere down here. Oh, crude actually let me do it. I'm surprised. I didn't think I could stretch that far. But even here, $50 target, hit our high probability target, and then we start seeing a little bit of reversal. Come back with a macro pullback signal. Same thing, you could probably want to cover it a little bit deeper. Boom, hit our high probability target. Market starts to reverse, comes back with another macro pullback. Boom, hits our high probability target. So, within the span of a few minutes there, you had 3 scalp trades. And if you're the kind of person that likes to get the heart pumping and the blood going while you're trading, that's an easy way to do it. However, you can see that crude's ranges sometimes are such that you're saying to yourself, what in the world am I scalping for 50 bucks? Right, here's a first micro-macro cross. And unfortunately with crude, a lot of times when you set it up, because of the ranges and such, you're only going to be able to go in with a onesie. So you're in and out, you got your 50 bucks, and then the market, does one of those. But that's why we have our other tools also. But to answer your question, for markets like crude oil, gold, the Russell, the mid-cap, the grain markets, I tend to double the profit objectives. And the grain markets, I don't double them because they're more volatile like crude. I double them because the grain markets are great. Once they pick a direction, they seem to stay with it. So here's a signal on the Eagle. And you can see I've doubled my profit target here. I've actually done a little better than double. And I can get in with 3 contracts. That could be a very good day. Now, soybeans are moving a little bit slower. They might not get all the way there today, but still, you can see there's lots of, actually, it's been kind of quiet lately in soybeans. Let's take a look at this move right here. So here was a green bar sell just out of the open. Well, before the end of the morning came up short of our profit target, but I stretched the soybean target just a little bit more than I should. But if we had gone with our high probability $200, once again, you're going to see that soybeans is going to find it almost effortless, right? Boom, 400 bucks. Here's a buy signal. Boom, 400 bucks. So it's those high probability signals. If you want to avoid the hand wringing and sometimes painful retracements that come with trying to ride out the market for longer terms, just go with your high probability signal. You're almost always guaranteed to get it. All right, so Craig asks, so when I feel like I'm following the birds and signals and trade with the trend, then increase my contract size, and with such high probability trade, you can be out with 1 to 3K and finish trading. Okay, well, as far as increasing your contract size goes, I don't know if you're using the trade manager or if you have the Trailblazer. But regardless, you should try to restrict your contract size, your risk exposure, to a certain dollar amount. The problem is, like for instance here, let's say we're going with this first micro-macro cross signal. And right now I have it set at risking 1% of my trading capital. So whether I risk it here, say I'm going to risk $180, if I frame it really tight, or if I risk it up here above this swing, I'm still risking about the same dollar amount, 195. I'm never risking more than I can afford to lose. Trade Manager says, okay, 1% of your account, you can afford to risk about 200 bucks. You can lose $200 and it will not affect you. Now, or me, it will not affect me. Your amounts will be different. So you need to take a look at your account, and let's say, and I'm just pulling a number here, let's say you're trading a $10,000 account. Ideally, you want to restrict your risk exposure to 2% or less, but for most instances, you're going to need to risk about 2%, at least trading the NASDAQ. You won't be able to trade, or unlikely you will be able to trade a market like crude oil for 2% of $10,000, which is 200 bucks. So you're trying to maintain your risk exposure all the time to about $200. Now notice the difference here. If I set up my trade this way, yes, I'm only risking $200, but I'm taking 3 contracts. If I risk my trade this way, I'm only risking $200, but I'm trading only 1 contract. The difference, of course, is if I enter the tight trade, the market brings me in and stops me out. So I don't have a chance, even though this is a high probability signal. It's our first micro-macro cross signal. It is to the downside. I would be suspect of it because we have had this huge uptrend. Right? We've got this great big uptrend, and all of a sudden we got sellers coming in. Well, do I honestly believe that the buyers are going to walk away from this market after putting in such a strong rally? Do I honestly believe the sellers are just going to drive the market down and the sellers are going to walk away? No. If anything, this is starting to look a little bit like a bull flag, isn't it? A big bull flag, but still kind of like a bull flag. So yes, we have a first micro-macro cross signal. Yes, it is a high probability signal. But that doesn't mean I'm just going to jump in with both feet. So here's our high probability signal. Now I start looking at it and I say, okay, well, big run up. I'm getting a sell signal. Question number 1, have I had a test of the extreme? Test of the extreme. We need to see the buyers try to regain the market from this short-term downtrend, and then we need to see the sellers knock them down. That tells me that, hey, the buyers are not so strong anymore. The buyers have either lost interest or the sellers have gotten stronger. So question number 1, test of the extreme. No, haven't had a test of the extreme. Some of you are looking at this little hiccup here and saying, well, Eric, isn't that the test of the extreme? Maybe. Excuse me. Maybe. Generally speaking, you like to see something a little bit more committed. Once again, look at how strong the buyers were coming into here. Do you really think that after a great big rally like that this is the best the buyers can do to test, to regain the market? I don't think so. Or I don't think so. I would think they could do better. So question number 1, have we had a test of the extreme? I would probably say no. Question number 2. Well, if we haven't had a test of the extreme and it is a high probability signal, how am I going to protect myself? Well, for starters, we can reduce our risk amount. So whereas you would normally risk $200, let's try to set up a trade so you're only risking $100. Okay, so I'm going to dial this down a little bit more because we're going to try to simulate a $100 trade. Should I enter right on the hash mark? Question number 3. Well, if I offer up 1, 2, 3 ticks, I can enter below the low. And that would seem a little bit more probable at this point, right? If the buyers are going to not step in yet and let the sellers slide a little bit further. I know the buyer stepped in a little bit here, right? I can tell by the tail on this candle. So maybe I'll enter below there. How far can I cover this trade? Well, ideally, I want to cover it up here. Oh, trade manager says, sorry, Eric, can't afford that. All right, well, maybe I can risk it back to this area right here. Nope, can't afford that. Okay, so now it's decision time. Now it's, I cannot afford to take this trade. Am I going to dial up the risk amount, maybe risk 3% of my account so that I can take this trade? Or am I going to pass on the trade? And honestly, when you're starting with a small account, and again, Craig, I have no idea how much money you're trading, but if you're, this is for those people trading with a small account, there are going to be trades that you cannot afford to take. There are going to be perfectly good setups that you're going to be salivating over, but you're not going to be able to afford the risk. Now, generally speaking, if you're trading a $10,000 account, you're routinely going to be risking 2, 3, 4% of your account. Just, it's going to be a way of life for you because you're not going to be able to take any trades, any $100 trade short of setting it up like that. There's your $100 trade. And if that looks feasible to you, then go ahead, you place the trade. Unfortunately, this time the market did not get low enough to engage your order, so you would have been fine. But like I say, with the smaller your account, the more you're going to have to place at risk. So this happens every time you take a signal. You kind of go through this thought process, trying to figure out whether this is going to be a viable trade, whether this is a signal that you should refrain from. Try not to second guess the market. I do have a loose rule of thumb, and I've mentioned this to you guys before, where if I have a winning trade in one direction, I will tend to stay with that direction for most of the day, unless I have a very good reason to trade otherwise. So for instance, we had a winning trade here in the NASDAQ on a buy. I'm going to be a buyer in the NASDAQ. We had a winning buy trade, excuse me. We had a winning buy in crude oil. I'm going to be bullish on crude oil today. So here we have a macro pullback signal. So the whole process begins again. Is this a high probability signal? Yes, it is. Have we had a test of the extreme? Well, not really, not yet, but it's, still looking like a high probability signal. How can I protect myself? Well, what if I dial down my risk amount? Okay, that's one way I can do it. I can run a deeper stop, perhaps. So I can try something like that. I can wait for a second push on the entry. See, I still haven't had my test of the extreme, right? So I'm starting to get a little bit suspicious here. What if I allow a second push on the entry? So the second push is merely you see if the signal engages, and by now I'd be saying, oh, nuts. And now I'd be saying, oh, good. I didn't take the signal. Let's see, did we hit our high probability target? Oh, look at that. They just kissed it. They came up a tick short. So I have my auto break-even stop working. I would have been taken out at break-even here. But what I was trying to demonstrate, I suppose this bar did give me a second push. From the little bit of a wick on this bar, I'm going to say that the signal engaged, traded a little bit higher. So when it was trading higher like this, that would have been a point where you could say, okay, if I get some renewed momentum, I will take this trade. Or maybe I should, set it up above that little swing high. So then the market comes down, and you can see here, this time it came up short of my auto break even. Darn it. And now we're in a little bit of a sweat mode. See, but what does this look like now to you? It kind of looks a little bit like a bear flag, doesn't it? But the higher it goes, the closer we're going to be here to testing the high. And then once we see the sellers come back, then we can say, yeah, okay. Sellers now have control. Let's get busy selling. That would be a good reason to abandon my bullish posture on the day and start getting a little bit more aggressive to the sell side. Once I have this test to the extreme and the market actually heading lower. So I know a little bit of a convoluted answer to your question, Craig, but that's kind of the thought process. So before you start taking more contracts, the reason I was going to suggest to you, you just don't want to start adding more and more contracts, even though it's high probability signals, is you're going to get yourself into a place where you're going to end up risking too much. I worked with a fellow, this was his habit. He wanted to trade, he had a moderate size account. He wanted to trade 6 contracts. And I said to him, well, you just can't blindly trade 6 contracts. But the way he wanted to do his 6 contracts is he wanted to set up all his trades like this. Just squeeze it really, really tight. And I told him, the odds are not in your favor. And the funny thing is, this guy was a gambler. He loved going to the casino. He knew about odds. He could quote me the odds on most table games in the casino. And yet he could not wrap his head around the fact that by squeezing the trade this tight, you're not doing yourself any favors. But here was the problem. He wanted to trade 6 contracts. He should have put his stop down here. That's a reasonable stop. But look at the dollar amounts. All of a sudden you went from $240 to $1,100 and change. You're not keeping your risk constant. And that's the problem with, or that's one problem with keeping your contract size constant and not your risk, is you are going to end up risking more than you can afford to lose. The other problem is, and this is what most people will do, is they'll start the day, they'll go big. So they'll say, all right, I'm going to start 3 contracts today. So they take the first trade and they lose, and let's say they lose, I don't know, $500. And then they say, oh, okay, I'm behind the 8 ball now. So I'll take 3 contracts again, or sometimes they'll even add to it. They'll take 4 or 5 to try to make up the loss. They'll take the next signal, and of course, what happens? They take another loser. So let's say they lose another $500. Now they're $1,000 in the hole. Rather than stepping back and saying, okay, I hit my limit today, I'm going to step back, or I'm doing something wrong here, I better get a handle on this. They say, all right, 3 contracts, too much today, I'm going to take just 1 contract. So they take the 1 contract, and of course, what happens? This happens, right? The market just rockets, and they're in with a single contract, and they might make $300 or $400, which is very good, but it's not nearly enough to offset their loss. Yet by keeping your risk amount constant, and this is a big thing, you might end up taking a losing trade. Let's say we set up this trade like this. We're not stopped out yet, but if we get stopped out, we get stopped for $200. That is an amount we can afford to lose. Let's say we take our, where's our first micro macro cross? Right here. Okay, so here's our first micro macro cross. We hit that. not only have we not risked them more than we can afford to lose, but we've also correctly positioned ourselves so that we were able to benefit from trading 2 contracts instead of just 1. And if we had a runner in play on this one, well, we might have been able to catch a larger part of the move. Here's another first micro-macro cross right here a little bit later. And I know you're saying, wait a minute, Eric, that's not a first micro-macro cross. Well, yes, it is. Even though the bars or the lines did not cross, the premise is the same. Everything goes out of sync and then comes back into sync. Bar colors are out of sync, trend lines are out of sync, filter is out of sync. First signal where everything comes back into sync is your high probability first micro-macro cross signal. So there you go. Boom, boom, boom. You make another $150. So now you're up $250. And you're just going in and out. You're not even trailing anything. But the point is you're always correctly capitalized. So if the trade goes south, okay, you took a hit. It didn't ruin you. If you win, you've maximized your earning potential. A lot of people just focus on the losing part. They try to keep their losses small, which is good, but then they forget that when they win, they should try to win big also. Craig says, thanks, I got it. I know, I get a little bit carried away sometimes, but it's a very important concept. Okay, Mark's asking, can you clarify bull flags, bear flags? Absolutely. Here, let's go to the hawk, because they're a little bit more prevalent on the hawk. A bull flag is just the name given to the move against the dominant trend. It's this part right here. That's called a bull flag. And the notion is that after you have a bull flag, the market will resume the trend. Bear flag is the opposite. The market goes down. You get this little bit of a retracement mode. Very often it does form a little bit of a channel type thing, and then the market heads higher, or pardon me, heads lower. So here the market comes up. This portion here would be considered by many to be a bull flag, as would this. This is a much larger bull flag, and you have to watch for this. If you get yourself in the habit of only looking for small bull flags, you're going to ignore the possibility that this is also a bull flag. But then you see it comes up and it stalls a little bit, and now it's starting to look a little bit more like maybe this is going to be a bear flag, right? Maybe the market will come out of here and head lower. Now, we don't know at the moment because we're getting all these yellow bars. We're really lacking any direction. So it's impossible to say at this point which way this market is drifting. We did get a red bar buy signal here. So it looks like we might try to head a little bit higher once again. But if this fails below here, then that would be enough for me to say, yeah, the buyers have lost their grip on the market. The sellers are going to try to push it down. Always try to have a macro view. I think if you're going to err, it's better to make the error on the conservative side. You know, if you look at this and you say, okay, here's a bull flag. That's a little one. Technically, I suppose you could make a point that this one is too, although it's not really much of a bull flag. This definitely is a bull flag. So we're working on a trend change signal here. We actually did get the trend change signal right here. Not much follow through at the moment on it. Your stops, I would suggest your stop should be down here. Although we have seen a little bit of a push here, if you were starting to get anxious on the trade, it might be a good idea to roll the stops in there. Just take your lumps early if there's a reversal. But the trend's still up. Here's our Raptor. You can see the Raptor violated that trend line, came down to the hard edge, kind of honoring this lower trend line at the moment. If we come out of here with a buy signal, that'll be a buy signal on the Raptor. But at the moment, the NQ looking a little bit flat. We do have a red bar buy signal here, which with these types of signals on the Eagle, we were against our ATR. I do tend to wait for the second push on those. But things gotten awfully quiet. Like Elmer Fudd used to say, it's very, very quiet. Okay, Dustin's got a good question here. He asks, Eric, is there a way to set up Trade Manager so it doesn't offer more contracts than my account can place? For instance, if I set up a trade with a small stop, it tries to place 7 contracts on a $2,500 account. That is very odd that it should do that. You may want to check with Ben, but usually there is no way to restrict the maximum. So what you need to do is you need to dial down your risk amount. So in other words, if I take a trade like this, see it's going to try to throw in 8 contracts. The only way I can reduce that is I can either switch to manual mode and have a max. Let's say I want to max at 3. So I can toggle between manual and risk mode and preset how many, what I want my max quantity to be. That's probably the easiest way to do it. The other way is to just dial down your risk amount so that it restricts your exposure. All right, things getting a little bit softer on the NQ. Nothing tradable there just yet. Oh, we did. Working on an early trend change signal here. We did get a trend change signal back here on the NQ. This is another one of these signals where you have to take it on faith. This is an early trend change signal. You have, well, I don't mean take it on faith. You want to have the confidence in your signal that you can take it. It is one of our higher probability signals. It's an early trend change signal. Look at that. Hit our high probability target and then starts to flounder. Oh, soybeans still plodding along. Michelle says you might want to take a look at crude oil. All right, let's go take a look. She says on the Hawk and the Falcon. So here's the Falcon. Crude making a major run today. Shoot a trend line across the bottom here. Okay, here's the problem with crude oil at the moment. So the market opened right about here somewhere, and it looks like it opened around, we'll say 56.50. And where are we trading now? We're trading up at 58. So what is that, 150 ticks? That's a lot, even for crude oil. We might have maxed crude oil's range on the day. Some markets will make typical ranges. The huge appeal of crude oil, of course, besides its volatility, so that you're almost always getting a market that's going somewhere, is the enormous ranges it can make. So that range from this morning's open to where it's trading now is about $1,500 per contract. Obviously, you don't need to be right on too many of those to make a nice impression in your bank account. So we'll see. They're floundering here. I suspect they may wander back down here to the trend line. We might get another signal. I sure hope it's a high probability signal, because I honestly don't know how much further crude oil can move today. I'm not sure I've ever seen it move more than 150 ticks. Normally 100 ticks, 90 to 100 ticks is its normal daily range. Here is crude oil on the Eagle. Well, Trade Forecaster says we've got 2 hours of trend left in this market. Unfortunately, it doesn't say whether it's going to trend up or down. But I can't help but think there might be some profit taking going on there. Let's take a look here at the Hawk. All right, so here's the Hawk. This might work itself into a macro pullback signal. You see it dip low a couple of times. Rather substantial retracement. Oh, that's in the overnight. Sorry. So here was the open, first micro-macro cross signal. That took you for a nice little ride. Another first micro-macro cross signal about an hour later. Yeah, we might get a macro pullback out of this. Okay, the NQ tailing off a little. Okay, well, Michelle sent me an email and she's in the room, so I'm going to save myself some typing. There's nothing going on here. Michelle was asking, we're looking from the Support and Resistance website, supportandresistance.com. We've got a little trade going on in the Aussie dollar where we're looking to buy above these highs. Michelle is asking about where was I looking to buy above, and it was these bars right here, Michelle. Your picture didn't come through. These bars right here. Oh, wait a minute. There we go. Now I can show the picture. Yes, you're absolutely correct, Michelle. Those pictures, those bars right there are the ones that we're looking to buy above. And you are absolutely correct. I got snookered on the first notice day is sneaking up on me again for soybeans. I should be looking at the July contract, not the May. I miss the old days where I had my printed expiration date calendar. It was right in front of me. I could look and say, oh yes, soybeans are expiring. I better roll into July. The good old days. Okay, I guess I better start paying attention to what's going on here again. Yes. Okay, we did have a first micro-macro cross signal back here on the hawk. And I think you can start to see how, the market was falling apart here. Came back with the first micro-macro cross. This is not quite the test of the extreme that I would have liked to have seen, but given the pace of the market that it has slowed somewhat. The sideways action would be almost the next best thing. It doesn't show that the buyers have control or the sellers have control. But then once we force the market back down here, we get the first micro-macro cross signal. We get a little bit of a move lower. I suspect this is going to come back and give us a macro pullback. I don't know whether it's going to be worth taking or not because the market has gotten a lot slower, but we'll see. I was just checking Michelle's comment. She said we missed the soybean entry by one tick. This was again on our position trade from the support and resistance site, and yes, okay, good. I was going to say, Michelle says, no, we just got put in. Okay, yes, good, because I was going to say, I do believe the market was responding to our parameters. Yeah, Michelle says about 15 seconds ago. Yeah, that's about right. Okie doke. So we're into the hard edge now on the Eagle. We can probably anticipate some sort of reaction here. I don't know. It does look to me like the NQ might be done for the day. It's kind of the mix that we're getting right there. The buyers failed to hold their support, so things are looking a little bit more bearish. They're not going to walk away though, because this was a rather large rally that they had put in before. So we might see this breakdown build into a rule of three type scenario where we can actually sell it. But honestly, I'm not so sure we're going to see too much out of them for the rest of this morning anyway. We might get something going on in the afternoon. The bias does seem to be down at the moment. Well, we'll stay with it for a few more minutes here, and if they don't shape up, then I might go have an early breakfast while the floor traders go for their 3 martini lunch. Oh, Dustin, I'm terribly sorry. No. Dustin sent me some trades a little while back, and I apologize, Dustin. I've just been so overwhelmed with stuff. I have not had time to take a look at them. Thank you for reminding me. I will move it to the top of my to-do list, and I will get you some feedback on those trades. My apologies. Frank is asking for my email address. Absolutely, Frank. It's eric@supportandresistance.com, and that's Eric with an H. Okay, yeah, Dustin says, I'm just checking to see, make sure I'm on the right track. I will look them over. I'm making myself a great big note right here. Dustin's email. All right, so here come the buyers pushing up. Thank goodness this macro pullback went into yellow bars. I don't have to make a decision on it. Just toss a little trend line up there. See whether the sellers are reacting to the trend lines or not. Surprisingly enough, we might actually get another bullish opportunity out of this. Another buy. Here is a red bar buy signal off of the hard edge. It's one of our higher probability signals. We'll see if we get an opportunity for a second push on this entry. You can see we're just playing around with the ATR line at the moment. There's a couple of ways you can do this. You can allow just place your order on the other side of the ATR. That'll get you in a little bit faster. Or you can actually let that next bar form. So let this bar form. It's going to finish up here. And then that will flip the ATR over, in which case you would buy above the high of that bar. The second method tends to be a little bit more reliable, even though, you can see that you're giving up, what is that, from 52.75, say from 53 to 50, you're giving up like three points in profit before you even get entry. But sometimes it's a good trade just to make sure you're on the right side. Let's see if I can find you another example of where that might happen. Okay, well, here's one actually from yesterday where I didn't pay attention to the ATR. I could have entered just on the other side of the ATR like that, or I could have waited for the bar to violate the ATR. Oh, it didn't. Let me find you a better example. This should be obviously choppy to you. You should not try to trade when it's like this. I hope that seems fairly obvious. Okay, here's one. So we're getting a red bar buy signal. Well, actually it turned into a green bar buy, but the point is we're below the ATR. So here are my options. I can either enter above the ATR like that, if I'm going to consider the ATR, that is. I could obviously just enter on the hash mark. I can take the ATR into consideration, enter on the other side of the ATR. Or I can let the bar violate the ATR and then enter above the high of that bar. So it does give up a few ticks, in this case not as many, but you'll notice the ATR has now flipped and it's in sync with the rest of the market. And that sometimes makes for a more viable trade. I believe that's how Mike Filigera likes to handle his, is he actually likes to allow the bar to flip the ATR over even though it means giving up a little bit on the profit side. All right, you guys, it looks like things are a little bit slow, a lot sideways. If you're trading this afternoon, I honestly believe if the NASDAQ can break above 44.52, we might see another rally. Nothing huge, but maybe a little pop back to the high of the day around 44.60. If it fails and turns over, I think you're going to see a rule of 3 print here on the Eagle. Maybe an opportunity to sell, but my suspicion is that the NASDAQ is pretty happy where it is right now, and it may just spend the rest of the day going sideways. Soybeans, hopefully they're going to continue to press higher. And crude oil, well, crude oil is trying to move a little bit higher. We did get sorry Michelle, I was looking the other way. We did get a red bar buy signal here on crude oil, which would have been an interesting one to take because we did not have the test of the extreme yet, did we? Certainly an easy one to scalp your 5 ticks out of, and one that you could have doubled your profit objective also. Okay, you guys, yeah, if you're trading crude, honestly, I can't see it doing too much more today. You're starting to see all these yellow bars coming in. Soybeans probably going to head higher. The NASDAQ, I'm going to say it's going to go sideways to higher. Have yourselves a wonderful day. I will see you guys again tomorrow morning. We'll talk to you then. Bye for now.